Every time a business makes a sale, buys supplies, or takes out a loan, accountants record it. But they don't just write it on a sticky note. They use something called a journal entry. And every number you see on a financial statement starts as one. Today we're going to learn journal entries using a lemonade stand. In previous videos, we've talked about the balance sheet, we've talked about income statement, and the cash flow statement. But where do these numbers come from? The answer is journal entries. Think of journal entries as an accountant's way of keeping score. Every transaction gets recorded so businesses know exactly what's happening with their money. Before we start, remember one thing. Every journal entry affects at least two accounts. Why? Because accounting follows the accounting equation. Assets equal liabilities plus equity. And to keep that equation balanced, every transaction must have at least one debit and one credit. And don't worry about memorizing complicated rules yet. Let's see some examples. So let's say a customer buys a cup of lemonade for $5 cash. What happened? Your cash increased by 5. And you also earned $5 of revenue. So your journal entry would be debit cash $5 and credit revenue $5. Cash goes up, revenue goes up, transaction recorded. Now let's say you buy lemon, sugar, and cups for $3 cash. What happened? Cash decreased and supplies increased. So the journal entry would be debit supplies $3 and credit cash $3. You gave up cash, but you gained supplies. Again, two accounts are affected. Now let's say your lemonade stand needs a bigger table and your parents send you $100. What happened? Cash increased by $100, but now you owe money. So the journal entry would be debit cash $100 and credit loan payables for $100. You receive cash, but you also create a liability. At first, journal entries might seem boring, but they're actually the foundation of accounting. Without journal entries, no balance sheet, no income statement, no cash flow statement. Every financial report starts with transactions being recorded correctly. Journal entries are the first step in the accounting process. They are how businesses keep track of every dollar coming in and going out. Master journal entries and you'll have the foundation for understanding almost everything else in accounting. Thanks for watching, and I'll see you in the next video.